I think, Webby, the question for traders now is, well, what does that mean with this big earnings week and how traders should be treating their portfolios? From that portfolio management side of things, we do talk about new buys and how you want to handle that, but also your existing holdings. So where do you stand with how to treat those?
So I always like to rate my stocks for to answer the question that you're asking. So I'll have my A stocks, which I'm going to try to do nothing with, right?
Mhm.
And as long as they're acting right. And then your B stocks, those are you can do stuff with. And then the C stocks just go out the door when I'm a C or below, because I will when you're in a power trend and things are moving, I will buy D and E and F quality stocks as long as I have a good exit on the chart. But when I'm expecting a pause or a pullback, based on what the market is telling me, then I'm not going to do that. I'm going to just go with A and B stocks. So, for example, with swing trader, we were on margin. We came off a margin. We're in the 70% range today. My goal is to stay there if at all possible, but we'll try, you always kind of want to have a goal of like, where is your market exposure? And, if things start rolling over, we're going to try to keep that at 50% or higher exposure because we're still in a power trend, still in a above the 21 day. But if your stocks or ETFs start triggering sell signals, you've got to take action. But it also gives us dry powder that if we get a surprise from the Fed today, which I actually think there's a possibility that I know the Fed funds futures only has a cut at 3%. I'm surprised it's that low. Like, I would think it would be more like 10, 15%. But whatever, if it's 3%, he doesn't like to surprise people. But I think there's an edge case there. But anyways, we wouldn't even know how the market would react if he did actually cut today. But I think everyone's expecting him to like lay the groundwork for, okay, now we're going to start our cuts, in September and all. And I think that's obviously the base case. So the market shouldn't react a lot to that. Besides the algos just moving around because they read the text of when he first puts out the statement, you get the algos who will read that, and the market will move around a lot on that. Don't act during that time frame if you can help it. Try to act beforehand. So that's why I'm saying you have your stocks rated, and if you're going into a risk event, having a C, D, E, or F quality stock on your sheet, you're taking on a lot of risk. Your A's and B's, the things that look fine and their quality, you can just, kind of leave those alone. And I'm leaning heavier towards ETFs, so
Yeah.
like an SMH, Soxol, or a UTS, or things like that, or what I'm personally trading. And I think the SMH looks really good, right here. It looks like it wants to go up to 300. Now, if the market gyrates a lot, uh, it might run into some trouble, but it was nice that it was trying to move yesterday in the midst of a weak overall tape. It was still up on the day, even though it was off the highs.